Okay. This is the weekly webinar. This is the usual 1 p.m. webinar where we prep our members for the week, prepare their trading for the week ahead. But we shifted it to 9 p.m. Just want to find out whether it's a good idea to shift it to 9 p.m. I didn't prepare the poll, but maybe you all can just type in like 1 p.m. or 9 p.m. Which one do you all prefer? So that we can have a good feel about, yeah, okay, good. It's coming in. 9. Okay, seems like 9 p.m. is a good choice.
Yep.
Okay, yeah, so this session is usually quite heavy. A lot of economic news events to digest. So I suggest everyone get their coffee and notebooks ready for the next hour of ahead. Yeah. So usually the agenda for the webinar today will be a quick summary of last week's economic events, and then a quick summary of today's currency call, because since we shifted it to 9, I believe people would want to know what has happened today. And then Daniel will share more about his signals analysis so everybody can learn, and then upcoming economic events and what to look out for. So without any more delays, let's get the first segment up. So the first segment is a quick summary of last week, where we summarize the economic events of last week. And why we do that is because it sets the stage for a lot of things happening this week. It gives you the context for this week's strategy and analysis. So John, let's welcome him, and yeah, John, you can take over.
Okay, hi everyone. This brings back the old time feeling, a lot of familiar names here, so I won't be too formal.
A bit of a quick intro as well, John.
Oh, everybody knows me, man.
No, I see some faces who don't know you.
Yeah, okay. So yeah, nice to meet you guys. Those who do not know me, I'm Jonathan, one of the coaches with LCMS Traders, as well as a partner in Forex Briefcase. So what I'm going to do now, I'm going to just run you through a quick summary of the happenings last week. Okay, in general, we still see that the situation is still heavily centered around COVID-19. Okay, but now with everybody getting used to the negative economical impact, the price movements are not so moving so drastically anymore. Things have kind of started to consolidate, and if I go to the charts later, you can actually see in this week as well as the last week, kind of consolidative move near support and resistance levels. So yeah, to start off, I think the biggest hit last week was on Monday, which we actually also went through in last Monday session. Okay, if you all still remember, fresh in your minds is the oil prices that came crashing, which actually led to certain moves in the Canadian dollar. So let me just bring up the US CAD chart for you. Okay, so this is I'm going into H4 this week, okay, instead of the daily time frame. Why? Because as price consolidate, the daily candles for 5 days don't really represent much movement. So on one time frame lower on the H4, you'll probably be able to see slightly clearer what's going on. So the red line over here represents the start of the week last Monday. Okay, as you can see, as the market opened with oil price crashing down, it has actually sent the Canadian dollar going up. Okay, this is easily, I think, almost 100 over pips to, yeah, about almost 200 pips there. Okay, and after that, with that move, it started to, bounce back and retrace a bit. And if you can see right now, it's exactly where we started off last week. And just to give you some point of relativity, this is the oil chart. Okay, you can see again this red line right here. Okay, this is the daily for FYI. Okay, you can see oil price actually came crashing down, two big bearish candles followed by a slight retracement, and now we are back to continue dropping. Okay, that's for CAD and oil. Okay, we also move on to Euro and Pound. Okay, Euro and Pound, not so much positivity last week. Okay, we have the Eurozone and UK actually reporting some contractions in their services and manufacturing sectors this month. Okay, if I bring you to Forex Factory, let me just share the screen. Okay, this is the 23rd of April. Okay, you can see that with all this bunch of red news here is actually showing you, okay, the data release, and it's quite a bit there because Eurozone made up of several bigger countries like Germany, France. That's why hence you have multiple rows, okay, for each kind of data, and you can see the release right here. But apart from that, okay, the same situation is currently also happening for the US, okay, contraction also taking place. Hence, in terms of price, okay, it is a matter of both weakening, just a matter of who is weaker than who. And actually, at the current stage, okay, there's not much difference except who is weaker at any point of time. So if we go back to the charts, okay, for pound and euro, okay, you can see again the red line denoting.
You have to switch back to the screen chart.
Sorry. Okay, yeah, so this is the pound chart. Again, the red line denoting the start of the week. Okay, you can see actually beforehand we were coming a bit of a small downtrend forming. Okay, we see price continue, okay, last week to approach our support level before bouncing off slightly. Okay, and for the euro, quite the same scenario. Okay, prices have continued the small downtrend. Okay, and again at the end, maybe about Friday, it has hit the support and slightly bounced off. That's also when US released some end of the week data that was not so good. Okay, and for the pound also a bit of a gloomy expectation because they mentioned that social distancing measures and COVID-19 measures will be further extended, and hence this would lead to a short-term poor employment number possibly in the coming weeks. So yeah, with that, the outlook is not that good. And lastly, I would like to bring you to the Aussie and Kiwi. Okay, Aussie Kiwi slightly different from the other currency pairs. If you see from the red line, okay, after testing the support, yes, actually came up pretty strongly, testing the resistance level at the moment of time. Okay, already passed the previous high here. Okay, Kiwi is also the same. They came down and then bounced up quite strongly. Okay, I believe this is due to, these two countries have taken very early measures against COVID-19. Currently, they have kind of stabilized the increase of cases, and very controlled very well compared to other countries. Okay, New Zealand also specifically mentioned, the president said that they will be looking forward. Okay, came out with a plan, announced a plan to slowly taper off these measures to go back to normal. Hence, we see certain upward move here. At the same time, with China also opening up its economy very slowly. Okay, now the Chinese are free to travel within the country, to each states. Businesses are slowly starting to open, production slowly starting to restart. Okay, we see Australia and New Zealand as commodity countries, okay, where they actually produce raw materials such as some metals, gold, copper, all these are used in manufacturing. So with the idea that China is slowly opening up, businesses will start to pick up slowly. Okay, these materials will soon be needed for production, and I believe that does drive some positive sentiment towards these two pairs, adding on the fact that they have also started to have COVID-19 under a certain extent of control. So yeah, that's sums up the major pairs, okay, for last week. US yen, I didn't really touch on because as you can see, it has been consolidating since 2 weeks ago. Nothing much happening there. Okay, so now I think I'll pass the time back to Chinwei, which will lead Daniel on to the signals, or maybe it's Kenneth to share today's first. Chinwei, please.
If I can jump in here
Sure.
while you unshare your screen. Okay, so just wanted to let you guys know, I just wanted to find out actually, if you can put in a chat, do you actually know, are you guys actually reading the blog on Forex Trading Asia? Because you get that link in there, you get the watch list in the Traders Club. I know Sijie reads it because he's the only one who's pointing out all my typos and mistakes in there. So I know one person reads it. I just want to let you know that if you haven't been reading it, every day that's where the write-up, what Jonathan has been talking about, that's where the analysis goes. It's in addition to the 11 a.m. call that I do, that's another write-up that we have as well, giving you a broad overview of what happened, what we expect to see in the market coming up. Okay, so back to Jiwei.
Okay. Can you all hear me? I think my internet connection is showing unstable.
No, it's okay.
It's okay. Okay, sure. So yeah, just want to ask the room whether anybody has any questions. Let's give a few seconds whether anybody is typing any questions. But meanwhile, I'll just ask John a quick question lah. So am I right to say, based on last week's events, it seems like any COVID-19 news would definitely, not definitely lah, but will more or less surpass the effects of the standard economic news that we are looking at. Even maybe interest rates. Can we say interest rates maybe? Will COVID-19 news surpass interest rates news?
Okay, I think it depends on the kind of news. Okay, if you're talking about interest rates, I believe in the very early time, maybe a few weeks back, okay, you see central banks already start to position themselves, okay, with interest rate adjustments to combat this COVID-19 situation. But as now you see the COVID-19 situation in many major countries have started to stabilize slightly. Okay, I don't think they will take further drastic measures on interest rate, okay, to further tackle the issue because they are already at quite low. Okay, for other kinds of economical data, I don't think we should be really comparing which is more important, whether COVID-19 or the data, because they are kind of interlinked. Okay, as we mentioned, Jin has mentioned these 2 weeks, like if due to COVID-19, employment data will be affected, GDP will be affected. These are the things that actually go hand in hand. So it is not really a measure of how we traders should see is the current daily COVID-19 news more important than the data when they are actually dependent on each other, or rather more the economical data is dependent on COVID-19 and how the countries actually react to that.
Okay, sure. Yeah, thanks for that. I think I got a better understanding of how to use the COVID-19 news and the economic data together. Okay, so yeah, next segment will be on Kenneth, where he will share what happened today on the currency call and what actually happened after the currency call. Yeah, so Kenneth want to take over?
Yep. Hi everybody, I'm Kenneth here. So let me share maybe a brief introduction of myself. I used to be a student like you in LCMS. So I know Jin, I think, for about 4 years now. So from there, I started learning as a student, and from a student, I became a coach and now a business partner in Forex Case. So let me share with you on today's analysis. So today we have talked about Aussie and Kiwi. Let me get the screen up. This, can everybody see my screen?
Yep.
Yep. Okay. So as today is a very quiet day of the day when the started, as Jin is say that Aussie might be going up into the resistance, and we are more looking into a more like a downward move instead of a upward move. So concurrently for Aussie today, right, we can see the candles is moving not really a lot. That it really moved up like above the previous high, but it's now having the resistance over here, and we are looking if we can able to break up above this area. So currently, I would say that for Aussie, you just have more patience to see how the whole things will be turning out to be. And for Kiwi, I feel that it's almost the same as well. And as per today, I think it's the New Zealand bank holiday as well, and not much movement of today. It's about 20 over pips and hovering all over here. So as per this morning analysis, it's like Jin has already said that it's looking up to a small upward move and maybe testing this resistance, and might be going coming back down again. So for today's Aussie and Kiwi, not much of a movement. Just have more patience and to wait it out and see what is the next move going to be coming in. Yeah, and that's all I have to say. Yeah. Yeah.
All right, cool. So anybody have any questions for Kenneth about Aussie and New Zealand?
So just to let you guys know why we're doing this is also, so every day for you, only for you all, people of all the Traders Club members, every day, well, Monday to Friday, we'll be doing a almost like an update of what happened in the currency call. So currency call is at 11 a.m. every day. At about 9 p.m., one of these good-looking guys will be doing a quick update to let you know whether the trade idea that I was sharing in the morning is still valid or not. You know, so sometimes a news might come up. You know, if for example I was looking at Aussie to buy, and then a news comes up, some terrible news in Australia comes up. The update will be, hey, you know, don't look to buy anymore. You know, stay out of Aussie, look for something else. So it's a quick update in case, you know, now you're all sitting at home, you might have more time to trade, but in case when you start going back to work, you come back into the office, then, you know, you come back at home, then you just go, hey, wait, what's the update? What's the recent news? So the 9 p.m. session is going to be a quick update. It's going to be as quick as what Kenneth just shared, you know, a couple of minutes, just to let you know whether the trade idea is still valid, something that you should look forward to or not. All right.
Jay asked, can I request to also include goal analysis? I think we do that every...
Yeah, Jay, so the gold analysis is done on
Let me check.
Thursday.
Thursday, yes.
Yeah, Thursday is yen and gold. I will go through a little bit of that later as well, so stay tuned. Okay.
Okay, yeah. So it seems like there are no more questions from the floor. In that case, I'll pass the next segment, which is signal analysis. Yeah, signal analysis from Daniel. Yeah, Daniel, take over.
Yeah, no problem. Okay, hi everybody. My name is Daniel. I'm one of the coaches as well in LCMS traders itself. I think a lot of them, you guys seen me before. I'm also a business partner with Jin Dao, same with all the rest of the guys as well. Okay, let's not. So last week I gave out some signals, and I would like to review 2 signals so that you let you know the analysis. Although most of the analysis is already in the LCMS Traders Club, but I will talk a little bit more as well. So let me share my screen. Let me get the charts out. This one. Okay. Can you guys see my screen? Yes? Okay, great. Okay then. One of the trade signals I gave on the 22nd of April was that to sell the New Zealand USD. Okay, so you can see this arrow. I hope you guys can see my pointer because I can't see myself. So, okay, great. Okay, so at this point I set a signal because it was going on the down, and I saw it was trying to like go into the resistance area and retest when it's dropping down itself. First of all, there was previous news previously a few days before that was the New Zealand USD. Okay, the CPI was doing a bit better forecast itself, but you can see it's mostly on the downtrend for 1 hour time frame. It was below this resistance retesting coming down fast. You can see this line here. If I do this here itself, you can see if at this point in time, you can see that actually the fast MACD here is actually showing me this to sell the momentum, and the slow MACD was starting to cross as well. Okay, starting to cross as well. So I gave the signal at this point, the orange point here itself, 0.5975, and it continued to go and it went down. So the next hour also it went down to hit TP1, so which is great. Okay, so which is great itself. And then what happened was that, okay, so you take a look at it. At this point, I sold. At this point here at TP1, it's still within the Bollinger Band. You can see here, it's still within my Bollinger Band. And it shows that if you see the momentum, and the momentum looks as if it's still ongoing, already the slow MACD also start to cross already. So I gave a feedback to say, hold, okay? Just to hold at TP2. So everything looks good as well. So indeed it actually maintained around 30 bips or so before it fluctuates up itself. And then, well, I waited the whole night.
Daniel, just to clarify, so the green lines are TP1, 2, and 3?
Yes, this green line here are TP1, 2, 3.
Then the
orange line is the entry, and then the red is the stop loss.
Okay, good.
Yeah, okay. So so you can see that it actually hovers around here or over the night itself till about midnight itself. So actually, if anybody's interested, not to hold over the night as well, just in case, you can actually close at around 30 pips as well. No harm done. But it actually went, and then but based on the indicators and what we have learned from the 5 steps itself, we can continue to hold. I decided to hold itself, and you can see that over the night, early morning, in the morning itself, about 7, 8 o'clock itself, it actually drops all the way down, okay, to hit TP2. And at TP2 itself, again, it's still within the Bollinger Band, so it's still pretty good. And then you can see if I do the cross line here itself, you can see that actually it's still a sell. The momentum still seems to be growing strongly. Both of MACDs, also the stochastic as well, say sell is still good to sell. PISA still said the direction is still to sell, so I decided to hold it there. And it also went all the way down to about 50 bits itself. Then it fluctuates a little, holding there, and it goes to the 30 bits as a TP3, 60 bits, and then I say, hey, let's time to close, because I think 60 bits is quite the momentum here as well. So do try to close it as well. If you see down here, it closed. Anyway, the fast MACD seems to be crossing up as well. And you can see that actually, if you, let's say you didn't close, my advice is you can see this candle here. This is a candle is indicating it's possible that it will cross back, it will be turning as well. So even if you don't closing at around 50 bits, it will be a good time to close as well. So, and then you can see that actually momentum start to go all the way up itself. So it's a pretty good trade for New Zealand USD itself. So actually, so that's why I'm trying to show you that what's my decision. Sometimes I look at it, not only in indicators, but also the news to see whether there's a momentum strong going in. Is it fundamentally, is it still going to be a downtrend, and any news itself. So that's what I do as well. Okay, the second.
Sorry, there's a question.
Yes. Okay.
Oh,
yeah.
Sorry, yes, go ahead.
Why did you sell New Zealand? Previous news is better than forecast. Technical is more dominant than fundamentals. So, Ho-Soon, which news were you talking about?
Yeah.
Sorry, I think, if not mistaken, in the Facebook, the posted news is the New Zealand CPI quarter to quarter is better than the forecast.
Yes. So the New Zealand CPI was better than forecast. I can see that actually around here, it actually more or less it actually previously it was going up already. It was taken. I think already a lot of analysis was taken account itself, and then previously I think fundamentally the US dollar is still strong based on global economy. Don't forget, remember at that time it was still New Zealand was still a lockdown period. So definitely the global economy wise, people will still tend to hold the US dollar so seems to be stronger. So that's why fundamentally I still think that if there's a turning point itself, I would still consider to sell New Zealand USD.
Also take note that the news was on the 20th, so it's a Monday. I just checked. So it's on a Monday. We have actually seen that impact of the news where the New Zealand dollar actually did move up on the 20th already. That's on the 20th, it's 22nd. So on the 20th, it has moved up already.
Mm.
So then the 21st, it came down, 22nd fluctuated a bit before coming lower. So overall, we still have that downward feel or bias towards the New Zealand dollar. So the quarter on quarter, we haven't really seen that impact of what happened because of the virus there as well. Does that answer your question?
Okay, thanks.
I also just want to point out one thing to take note. Okay, that although we do wait for impact of news to wear off, and if you realize Daniel did not enter the trade right after the prices start reversing, but he actually waited when his entry, was when there was a significant bearish movement. Okay, and even wait past 1 or 2 days before he picked the trade. So just to avoid some counter trend risk right there.
Okay.
Yep.
That was good. Really enjoyed that. And I'm a bit disappointed that 70% of you didn't take on that trade. Can I find out? I launched the poll, right? Daniel didn't know I launched the poll. How many of you, who was the one who took the trade to TP3? If you can put it in chat. Who took the trade to TP3? It'd be funny if it was so soon, though. Come on, own up now. No one? Okay, fine. Don't tell me who you are. I'll know sooner or later. Okay, Daniel, continue on.
Okay, yes. So so that's one of the good trades that was taken. It's also the other one I would like to highlight is sometimes things doesn't work out itself. So you can see that this is a Euro USD news. I actually looking at the downtrend portfolio. In fact, I was looking at it. It's within my, although it's a downtrend, and you can see but it's still within my zone. So I never give a signal, or that. In fact, like this kind of how do you say this one pops up a little bit. I also didn't give a signal because it is in the consolidating on 1 hour time frame show. So I was waiting for a big breakout, and indeed this breaks big bearish candle came down itself, and it so happened to see also that the German business climate was worse than forecast. So I guess this was what it was happening. So looking at it, if you look at this point, so after this candle close, I look at it, it was still continue to move down. So if you look at here, you look very closely, actually both MACDs were also indicating a sell momentum itself. My expectation is still will continue to go down fundamentally and technically to go down. So, and it broke my 1.08 zone here. So I tended to give a sell trade. And in fact, it just went down like 5 to 6 pips itself before it turned. Somehow another things doesn't work out that way. US dollar was beginning to weaken already at the point of time, and the euro somehow strengthened a little bit. So it actually went all the way up to hit the stop loss within the 2 hours time frame, and it hit the stop loss and it continued to go up. So this, unfortunately, sometimes things doesn't work out, but I will still have taken the trade because all ideally the rules were followed. Decided to, and I will still have taken the trade. So just remember that you just got to accept it, and not all trades will move as expected. Not all trades will be winning, but you have to accept the losses, and then with that, you so long as you overall win more than you lose, that's your winning trade. Okay, yeah, that's all from me. You got any questions? Let me unshare.
Yeah, I realized the members are quite quiet. I think maybe they're new to the whole setup. Actually, for us, there are no stupid questions here.
Yeah.
Everybody just ask anything you want. Literally, you can ask. I mean, don't ask things like how to use MT4 lah. We have another session for that lah. But if you have things like how to use Bollinger Band, how to use your indicators, now's a good time to ask.
Go ahead and ask it. Yeah. So this is LCMS Traders Club. Especially in doing the signal stuff, you ask any questions you like Ho Soon ask us questions itself. And any questions, even you ask like why do I exit, or should I should I not, that kind of stuff. Just go ahead and ask. I will be more than happy to.
So Daniel, I put you on the spot lah, since the room is quite quiet.
Sure, sure.
Okay, so the usual questions we always have is, hey, TP1, 2, 3, which one to take? So based on what you have been doing, I can tell you have a lot of analysis inside whether which TP to take. So can you just share a bit?
Yeah.
Everyone.
So okay, one of the, if you want to have a set of rules and kind of stuff, one of the things I really like to use, as you notice, I always write in the LCMS traders was the Bollinger Band, because if you look statistically, 95% of the time the price will maintain in Bollinger Band. That's what Bollinger Bands are, especially 2 sigma. Bollinger Bands rules calculation based on calculation. So if it goes very strongly out to so far to hit any of the take profit, I would a high chance is yes, maybe to close the trade as well, because there's a very good chance that it will actually go back up.
Can you show an example of what is outside BB? Just putting on the spot.
Sure.
I mean, I'm really asking you basic questions so people know that, hey, you can really ask basic questions.
Sure. I think that just now like that. Let me share my screen again to show you my
yeah.
Give me a minute. Okay, so if you see the New Zealand dollar, you see that the TP, the take profit tree, you can see my chart here. Are you able to see my chart? Because I can't see my chart.
Can.
Okay, great. Okay, so you can see the chart. If, for example, it goes this Bollinger Band, this price actually all the way shoots out to TP3, I would have closed it if you're monitoring it as well. But for example, like if it's within the Bollinger Band, like this one here, the long big candle, I would look at it and to see whether to close or not. But usually this kind I wouldn't close. This kind, even big Bollinger Band usually has some big movements by the prices or banks changing. A lot of retailers are doing selling, so the momentum could be very strong. This one is not outside Bollinger Band itself, but if it's such a big candle, let's see how many bits did he drop? This one, 30 bits, around 28 to 30 bits itself. You can consider to close, especially if you have been waiting the whole night and in the morning you wake up, you take a look at this big bearish candle, you entry here, and you didn't close and you have 50 bits. Honestly, you wake up in the morning, you see 50 bits. Are you going to fight for the 10 bits to hit the 10 bits? You just see 50 bits, go ahead and close, even though I'm not Bollinger Band, because it's just a factor of time. The longer time you are, sometimes you put a risk inside there as well. Let me see if I can find another one. Let's see. Let's
on the 16th of April.
And you know what you're finding?
16th April.
Miao Yen Lam ask, will you all consider doing a longer term signal?
Okay. Longer term signal, we can consider that, but usually for the signal kind of trade, usually this kind of signal trades are more of like day trading or swing trading kind of stuff. So usually no more than 2 to 3 days. Okay. Longest was 3 days. Yeah.
If I can add on to that as well, why we try and standardize the trade signals in terms of take profits and stop loss, it's really because I understand that most people trading will not be trading very big accounts, so taking with that in consideration, I don't expect you to be holding on to trades for a week or 2 weeks, because if you do, the risk profile to the profit levels are going to be huge, which would also mean that you would be entering a very small trade size. So as you enter a small trade size, hitting a big profit target is still going to be almost equal to entering a reasonable trade size towards a medium-sized target, and then just repeating that over and over again. So I prefer to encourage that repeatability rather than going for that one big trade. So that's why I tried to get the signals set up that way.
Cool. Yeah, then you wanted to show an example.
Yeah, let me show you. I found an example. Like for example, let's say you enter a trade here, okay, and it goes all the way down. You can see this big candle. Let's see this big candle. It's so far away from the Bollinger Band. I would really consider to sell. And indeed, you can see immediately, not immediate, next few hours, it actually drifted back into the Bollinger Band itself, and then it hovers inside there. Okay, and then for example, let's say this is a sell. Let's look at the buy. If for example here, let's say I take a trade here, take a trade here, and it goes all the way up, I would consider a sell, because for the 1 hour, if I had 20, 30 pips is pretty good as well. And if you don't close, even like this kind of candle really outside, it went out of the Bollinger Band, please, I think there's a good chance to close. It goes back in again, and if you think it's a good chance, if you got the retracement back, grab the hold on to secure your profits, and then if you have a chance again, you can go ahead and enter again, because once you go to Bollinger Band, if it's following the trend, it will still continue to go up, for example. Okay? So I hope that answers your questions about whether yes.
If you were when you enter your trades, because I know you enter these trades, do you put your take profit at TP 1, 2, or 3? Right.
I right at the beginning I put at TP3.
Okay.
Then yeah, that's what I do. I do it, and then every hour I regularly just take a look at where is the trade going to be like, you know.
I would even better suggest you enter your trade, you see the trade signal, you enter your trade, you put it at TP3, then you check the Facebook group over and over when Daniel does his analysis, tell you when to get out of a trade. That would be the way.
I'm the alarm clock, yeah, okay.
You don't even have to check your charts anymore, you just listen to what Daniel says.
Yeah. Okay, yeah.
Awesome,
Daniel.
Awesome.
Daniel,
yeah.
Can you show back your Euro trade?
My Euro trade, Euro USD? This one? The Euro USD trade?
Yeah, the one that
yeah, correct.
Yeah, so I just spotted something here. I think in the weeks we have been loading you guys very heavily on fundamentals. I think you guys like the fun part, which is more technical. If you realize that Daniel entered this trade, okay, based on the breaking of his support. Okay, however, after he entered his trade, you realize that the price did not say go back in the zone and continue to consolidate there or to come back down, but rather what you see here is the price actually strengthening quite a bit. Okay, in fact, going back past the zone to go even higher. So what would I personally do at this point of time? Okay, definitely we take the loss. Okay, we limit the loss. But one thing that we can do here is that I will actually review, okay, my support level. Okay, perhaps I will shift it down a little bit. Okay, depending on the previous points before. Okay, but in this case, I'll perhaps shift my support line down, okay, during the weekend when I review my levels. Okay, so that in the future, if the price comes back down to this point, okay, I will make sure that, you know, the price does break past this low, okay, before actually considering a sell to prevent such as being caught up in a similar situation. So this is some part of the trade review that we do. Okay, some follow-up action so that we keep on improving. Okay, so in terms of this, I just want to say that we'll be covering more on this topic on Wednesday, Daniel and myself. So I hope you guys can join us also on Wednesday night. Yep, that's all.
Okay. I hope everybody's happy.
Okay, yeah.
Okay, let me stop sharing that.
Yeah, so just to add on to what Jonathan's hello, can you hear me?
Yep.
My connection is terrible.
That's good.
Sorry, my connection is terrible. Yeah, so to add on what Jonathan shared is you guys can take a look at the Facebook page. I mean the Facebook group where I put up a link to register, so-called register on the Facebook.
All right. I'll do it for you.
And on the group.
You're breaking up. I'll do it for you. Okay. So while his internet breaks up, just a quick summary. What we're doing for the Traders Club members is what we have currency calls at 11 a.m. every day, Monday to Friday. Every night, okay, essentially every night you still get to see us. You see us too often now. Mondays, we'll be doing this session where we'll be sharing what happened previously and what's coming up. I'll tell you about what's coming up later as well. And then we have a bit of a discussion, get your questions ready, you know, ask anything you want here. On Tuesdays and Thursdays and Fridays, we just do a quick update of what the currency call was on at 11 a.m. On Wednesday, we call it the coaching call, right? Wednesday is coaching call at 9 p.m. again. So I think Jinwei has done the events there. He's done the links. He's done the pictures, right? Daniel and Jonathan will be running the coaching call on Wednesday at 9 p.m. Every session is going to have a specific topic that they will take you through. For example, how to read trend, how to do your support resistance lines, when to update, when to check them. Just really guide you through, if you need help with reading indicators, that kind of things. Just to guide you through that. If you have any questions, gather that and then ask it during that time as well. So you have two chances, or you got a lot of chances, but main two chances is Monday at 9 p.m. and also Wednesday at 9 p.m. to ask all your questions if you need help with your trades. Sounds good so far? Give me a big nod if it does. All right, I got all nodding heads now. Right, so this is actually replicating. I know some of you are Godwin, Derek, Sijie, you're all quite old students of mine. This is really replicating what we used to do in person, right? So we used to run 2 mentoring sessions every week in person, where we gather everyone, sit together in the office, trade together, discuss, coach, look at your screens and see what kind of trades you're doing, whether it's right or wrong, whether you're making money or not. So we can't do that now. We do it online. Once we get out of being stuck at home, then we might try and do both an online version and an in-person version as well. So, let's bear with us for now, do it all online, keep joining these sessions. And then when we can, we will do an in-person session ASAP. We still have our office coming up, our new office coming up, which we cannot do anything yet. So once we get that set up, then we will get you all into the office. Sounds good? Awesome. This took over Jinwei's part, but yeah.
Yeah, so I think you can just go on because the last segment is about you. I mean,
All right.
the whole upcoming what to look out for and stuff.
It's always about me. Yeah, so Robbie, we will keep it online. Don't worry, we will keep it online. I still want you to be on it all the time. But then, we might even try to, when we do the in-person session, we might have a camera there recording it or streaming it so that you can watch as well, right? Because we do have people coming in from Philippines, UK, Canada, Hong Kong, Indonesia, Malaysia. We got students everywhere, so we put it online to keep in touch with everyone. Okay, sounds good. So what I wanted to do today was to really go through every currency pair one by one. And I'll try and still do that. I don't want to go on too long tonight, but I'll try and still do that quite quickly. And then after that, I'll go through one topic which one of the students asked about it in the Facebook group. Okay, so can you see my charts? Wait, I can't see you. Can you see my charts? Good. All right. So today we spoke about. I won't look at the daily charts because daily charts we have been looking at it for the currency call. So I'll look at the H4, and if anything goes really interesting, I'll look at the H1, right? Because we're trading these charts. H4 on the Aussie, I'm still looking at it as a possible. It could move up. It's sitting at that level. I'm slightly not so sure whether it'll go as high up. But it probably will sit there before coming back down. Why I think it's coming back down is because you can see here that MACD, can you see my arrow? Yep, the MACD is it's turning back down a little bit. So it's trying to cross back down and it's just nice hit a resistance as well. So I do believe that it could replicate something like what happened in the 14th of April. So it could do that, hit there before coming back down when it does test this level. Okay, so quite straightforward in Aussie. Looking at H1 time frame, again, the MACD has already crossed downwards. At this point, I would not be selling right now because for the past 1, 2, 3, 4 days, it's gone up 210 pips, 212 pips already. So I won't be looking to sell at this point. I would look for it to turn back lower, although the indicators are telling me that I can sell. Like what Daniel has been saying, don't just follow indicators. I would still look for a candle to move possibly down to that point before I start looking to sell. That's going to be a good, maybe a good 70 pip stop loss for a good 160 pip take profit. So those are the kind of levels I'll be looking for in the smaller time frame. On H1, if I do enter that point, I'll probably consider a close at about 80 something pips as well, because that's where it could hit and bounce back up. So this is one level I'll look for. Next level I'll look for is 130. Next level I'll look for is 160, right? So if it does turn back down, that's where I'll be looking for, looking to enter a trade and also possible take profit levels. Okay, so I think this might answer a bit of I forgot your name, Mel Yen's question about in terms of a longer term trade. These are slightly longer term trades compared to what we signal out as well. Okay, New Zealand US dollar, Kenneth just went through that as well just then. Probably going to sit there, probably going to do the same thing as the Aussie. It looks like it's trying to cross down a little bit. So I do think that it could test lower, but more likely I think it's going to sit there for a while, no real direction before coming lower. But the Aussie, Kiwi, I'm not so keen. Why am I not so keen? Is because it's probably going to come to this point. So if it does drop to that, I'll be risking maybe 80 something pips to try and make 70, with a very high likelihood that it could go back up. So I'm not so keen on the Kiwi at this point unless it goes below this level, but if it goes below the 5.59 level, then your stop loss is going to be like 200 pips with a 60 something, and then after that maybe a 200 something again. So the stop loss to the take profit levels are quite skewed, right? For lack of a better term, quite skewed. So I wouldn't be so keen at it on it for the time being. On the H4, on the H1, it would have to cross lower before I will be looking at, a 50 pip stop loss for a possible 50 or 100. I'll take it into consideration, but between the Aussie and the Kiwi, I'll probably look towards the Aussie a bit more, right? So it's really about trade selections, because you can't enter all the trades at one time. We have a whole range of currency pairs that we need to pick the one that is going to make us the most money the fastest, right? So it's not about entering every trade, it's about picking the one that makes you the most the fastest. Euro US, I'll be talking about this tomorrow in general, but to give you more detail, I was planning this already. It has been trying to go up. It's probably going to test this resistance level before coming back down. It's kind of doing what I said it would do last week. So last week I said that it might go up to this point before coming back down. It has actually done that. It's actually gone up to this point. Now we need part 2 of this move to happen. Part 2 of this move would be for it to come back down based on the indicators that I have, right? It's starting to plateau, turn back down a little bit, coming out of being oversold, so it has hit that resistance level, looking to try and react to move lower. Okay, makes sense so far? Rambled on very quickly, but hope it makes sense to you.
You want to answer Shijie's question first, or
I haven't seen his questions.
Okay, he's asking, is there any reason for USD to be stronger fundamentally?
Is there any reason for US to be strong? No real. So I've been going through this quite a few times. No real reason for US to be fundamentally stronger than everyone else, apart from the fact that in relative terms, everyone else is weaker than the US, right? So they're doing worse than the US. The move towards reserve currency is always going to push the US dollar stronger, push the pound stronger, push gold stronger as well. So that's why we see a stronger US dollar happening at this point. And then as we see markets start to rally a little bit better, think people in New York, in the US, thinking that they've gone past the peak of the virus, they signal some level of recovery. So that's something that we see a little bit of positivity, a little bit of optimism into the US dollar. Make sense? Good, good, good. All right, so euro, yep, I would wait for it to turn back down before I look to sell it further. At this point, nothing yet, no real direction. I still think it's going to test this level before coming lower. Everything else looks poised to sell, but let that move develop a little bit more. Euro pound, well, euro pound is still at that level. So I would, if I were you, totally ignore this at this point. I'm not even going to bother elaborating more. Just sitting at that line. This is why you need to draw your lines perfectly. This line is just there. It's not moving away from the line. Don't worry about euro pound. Pound US dollar doing well. I mean, it's came down, hit that level. It's trying to bounce back up now. I do think that although it's bouncing back up, it did a little bit of what we said it would do. It's done part 1 already, was done part 2. I do think that it might come back down because although they think that they have gone past what happens in the virus, they're not very optimistic. They're still very careful about what could happen next. So we do see a little bit of possible downward move. Maybe not immediately, I would say maybe move up a little bit more before coming lower. Why I think that is that whole discussion of whether Brexit is going to be extended, the transition of Brexit is going to be extended. If it does get a bit of extension, we could see a little bit of positivity into the pound, which is why I think that we might see it move up a little bit more before turning back down. On the H1, when it loads, all right, it looks like it's going to come back down. Indicators, everything telling me it's going to come back down, but I still think that it might sit there a little bit, try go a bit higher before coming back down. So I would say maybe something up about there before it starts coming back down again. Have I rambled on quickly enough to lose everyone? No. Okay, I'll go faster. All right, so US yen, hey, US yen today, what they did was they said, hey, we're going to remove our limits. We're going to be ready to buy more when required. Okay, so the news came out on Friday, if I'm not wrong, that the Bank of Japan was going to remove the limits in terms of the asset purchase, and they were possibly going to double the amount that they were purchasing to from 1 trillion to maybe 2 trillion yen a year. What happened was today, they actually did come out and say, if we remove our limits, we can buy as much as we want. But did they? Did they? No, they didn't, right? They didn't do it. They said they can. They said they have done remove limits. They can do what they want, but they haven't done anything. That's why we have seen a little bit of a strengthening in the yen, because it's disappointed markets a little bit, right? Everyone was waiting for, or even myself, waiting for yesterday, waiting for today and tomorrow that they were going to say, we're going to buy 2 trillion yen, weaken the yen straight away. What has happened was they said they have everything in place, but they're not doing anything yet. They're still waiting, right? Why, in my view, why they're waiting is because if they did go and buy 2 trillion yen, and double their purchase, it is not going to have a massive impact on the yen. Why I say that is because if they did try and weaken the yen, what's everyone else in the world going to do when they move to reserve currency? They're still going to buy the yen. They're still going to be trying to strengthen the yen. So it will be like the world trying to strengthen the yen, the Bank of Japan trying to weaken the yen. They'll just balance each other out, right? They're going to balance each other out. They're going to still have a bit of downward move and a bit of upward move. It's going to be quite a hard fight. So what I believe the Bank of Japan has done is they've removed the shackles. They have shown intention to double, and then they're going to wait. They're going to wait for everyone else to do what they do, people buy into reserve currency, or for markets to even show some slight recovery, then Bank of Japan is going to double, right? When everything is settled down already, they weaken the yen, yen's going to rocket. US yen is going to rocket because that's where you see the maximum impact. Okay, so there's a bit of insight on what I've read and what I believe might happen to the US yen. So no trade for now for the US yen, Euro yen. You know, I still hold from what I said last week, right? Unless it breaks below 115.91, don't enter that trade. I do believe that we could see a little bit of upward move or fluctuation within that area. So be a bit careful on the Euro yen there. Robbie asks, why would Bank of Japan want to weaken the yen? Robbie, Bank of Japan is always looking to weaken the yen because the Japanese economy is quite export based. So when you're export based, you want a weaker currency to encourage export, make your exports a little bit cheaper, so you encourage exports for people to buy your products. As people buy your products, you know, in the economy, you're producing more, you're hiring more. There's more income coming in from overseas as well. So a weaker yen will stimulate exports, and that's why the Bank of Japan would encourage a little bit of a weaker yen. A stronger yen would make exports terrible. I hope that answers your question. Euro yen. What? Oh, good.
Thank you.
Yeah, no worries. Euro yen went through that already. Pound yen, hey, pound yen, look at it. It's sitting there. It's sitting there. It hasn't done anything at all. So don't look at the Euro yen. Don't look at the pound yen at this point in time. Somebody asked for gold. Who asked for gold? Put your hands up. I can't remember your name, but somebody asked for gold. Yeah, Jay.
Jay asked for gold. Yeah.
Is Jay still around? Or has he left us?
I think he left. Oh, yeah, he's here.
Okay, hi Jay. I don't know Jay who, but hey Jay. All right. So looking at gold, my analysis for gold was if it breaks 1730, I'll be looking to buy. All right. Gold, don't look for short-term trades because don't look for too short-term trades because volatility for gold is relatively high. So I would still stay on the day one time frame. I'll look for it to break above 1730 before I would look to buy. Previously, I was saying that if it bounces up against 1692, turns back down, we could look to sell. I don't think a sell now will be a good idea. If I were to further elaborate on that, I think that we could see it come down towards 1692 and then bounce back up again. So hit that support level of 1692 to try and reach higher. So quite a short and sharp answer. I hope that answers your question, Jay. US CAD still sitting there. Oil is a mess, right? Although oil is a mess, let me see. Jay probably has responded. Good. Jay's got it. So although oil is a mess, it hasn't really translated into the spot. Well, has a little bit translated into the spot prices of oil. Oil futures is a mess, but it's translated slightly into oil prices, spot prices. What it has happened for the US CAD is they've been a bit more careful. I do think that at this point, we can see a little bit of an upward move for the US CAD before a overall downward move. So for US CAD, I still think it's going to sit in that margins. You know, if I were to draw it out, it's probably going to do something like that for an extended period of time. So I'll be a bit more careful with the US CAD at this point, right? So if you have noticed what my mantra, right, for this past 15 minutes I've been talking was be careful, be careful, be careful, be careful, be careful, because right now a lot of these pairs are sitting at major support or major resistance levels, and at those levels, once a clear direction comes out, it's going to rocket upwards or it's going to rocket drop downwards quite strongly. So really something to you know, there are trades that you want to get into, you know, for example the euro. for example, the Aussie when the news comes out, even the pound maybe, but the yen pairs, those reserve yens and the oil ones, I would be a lot more careful with that. Sounds good so far? All right. I've only got Robbie giving me thumbs up. So I want to do a quick, this is the last bit, I promise. Right. This one, Justin, so I was searching for this just then. Justin is not on this call. I don't think I saw his name come up just then, but one thing he said is, can I open up a news article to read on the day itself and how I get my bias, okay? So I haven't answered that question for him. So why I brought this up as well is, we are, all 5 of us are watching this Traders Club quite intensely. So if you have any questions, put it in there. If I don't answer it straight away, I will get to it eventually. So for Justin, when he watched this video later, all right, today was the Bank of Japan monetary policy statement, right? So what I did now was I actually went to read it. So I brought it up. So this is the statement here, right? What I do or what I don't do, actually what I don't do is I don't go, well, Japan's economy, blah, 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 blah. I don't read the whole thing because based on the news that we've been going through already, I know what am I looking for. I know that I'm looking for a remove of limits, and I know I'm looking for double the amount of purchases, right? So straight away, I scan through, I go, hey, Bank of Japan, appropriate to increase corporate bond purchases, and then further active purchase of government bonds, right? They're going to increase bonds, they're going to strengthen the facilitate financing, they're going to increase T-bills, they're going to set this, they have, that one's not important. So I'm going to go through all that quite quickly, and then I'm going to go read that, right? And then that's all I do. I've scanned through that document and I know, right, they have done exactly what they say they want to do. They want to increase, but they haven't done it yet. They haven't actually said when they're going to start doing it, or the date and how much they're going to do it at. So straight away, it's a gathering of information, right? So I wanted to, there's no news that's going to tell you straight away, when you read it, you go, oh, great, I know straight away what's the, whether it should weaken or whether it's strengthened. It's gathering of information. It is putting together things we read. No, can't find it now, but things we read from before, all the news about that, whether they're going to increase, or the news that's coming up. So as we read all the different news, you gather information and then you build that bias. You don't really get a bias from one news source, right? You expose yourself, and then it's a matter of today, yesterday, the day before, gathering a few days worth of information to build a bias as well. It's not so much of one news. So if tomorrow's CPI, if for example that day we're just talking about it, if on Wednesday's Aussie's CPI quarter on quarter is going to come out at 0.5%, it doesn't mean it's great news for Australia. It means it's good news at that point, but based on everything else we've seen, it might still be quite negative news. So it's maybe a bad news, or one good news. Doesn't mean that it's all going to be great after that. It's bad news, one little good news before bad news again. Overall, I'm still looking at the bad news. So my best advice on how to look at fundamentals is really seeing the overall picture, accumulating bias, accumulating information to build your bias. All right, I've rambled on very quickly, more than 500 words a second. No, I'm just kidding. To try and get through as much information as I can. And everyone's leaving me already. 2 persons said good night already. So any questions from everyone else here? No? You're all good? You're all happy? You're all time want to go to sleep? If you don't have any questions, should we call it a night, Chinwei?
Yeah, I guess we have taken up quite a bit of the time, like 1 hour plus already. So just want to remind everybody that a few things like sign up for the Wednesday call if you're new to trading. Even if you're not new to trading, you can just sign up. Join us on every day's 11 a.m. currency call. And also this webinar is being recorded and we will use the video for promotional purposes. So yeah, just for you guys to take note lah. Yeah.
Okay. So about the recording, it will be a unlisted, I can't remember, unlisted recording. So it will only be available to club members. I'll put up the link in the club. So it will only be available to all those who click on the link. Please do not share that link with everyone else, your club members, so we keep it within the club. It will only be made public maybe 1 or 2 weeks later. So everyone else will get the information when it doesn't matter anymore. You guys get it straight away. All right?
Yeah. So yeah, I think we can call it a day.
Good. Yeah. So wait, I want to take a quick picture. I always like taking pictures.
Do we need to do that thing?
Do what thing? Okay.
All right. Cool.
All right. So thank you all. I hope you had a good session. We'll catch you all at every other webinar following today. Good night.
Awesome. Good night.